Good morning, everybody. It's Tom Kline. Welcome to Tuck the Octopus. It's called Tuck the Octopus because running a dealership or running a business is like trying to tuck an octopus into bed and the tentacles keep flopping out. So that's why it's named that. So I wanted to talk a little bit. A couple folks asked me at the bottom of the screen, it says GRC Consulting. What does that mean? So GRC stands for Governance, Risk, and Compliance. So let's break down what each of those means. Governance, number one, is, and we talked about this a little bit yesterday, how you run your business. On what principles do you run your business? And what are the overarching things that you preach to your employees so they know in any given situation what you would want to do? That's governance. Risk, number two, under the R for GRC, risk is what potential problems can you have and what potential problems could put you out of business and how do you deal with that. And then three, the C for GRC is compliance, and compliance are those rules and regulations that you have to follow as a business to make sure that you don't have a problem by following all the laws. So compliance is the active, proactive, I should say, way that you implement the laws and protect your customers, because regulators are mostly concerned that you're not taking advantage of the public, especially car dealerships, finance companies, those kinds of things. So I have a client and friend, Ryan Sodakoff at Stephen Toyota in Harrisonburg, Virginia, who says that there are three ways to do things. And that's what I want to talk about today: the right way, the wrong way, or the way that we've always done it. And I think a lot of our dealerships are somewhat guilty of the way that we've always done it. I guess it's not just dealerships, it's all businesses. And the way that we've always done it isn't necessarily the best way to do things. I think there's a better way, hence my name, Better Vantage Point. I think there's a better way to do things, and you have to examine your operations in order to see which parts that you could do better. Because just because it's the way that you've always done it doesn't mean that that's the best way to do it. There's likely a better way. And when it comes to governance, risk, and compliance, the first most important thing that I think is worthy of doing is going through your operation and saying, what if? What if these problems occurred? How would we handle it? So let's talk about what if. What if can be catastrophic problems. It can be small problems. But let's say, what if, and we talked a little bit about this yesterday, what if your parts driver or what if your lot porter hits someone in a driving accident, right? And that other person is severely injured. Do you have enough insurance to cover that problem? Now, when I go in and take a look at a business for the first time, one of the first things we talk about is how much umbrella insurance do you have? And this is a problem that I've discussed with dealers who have one store and dealers who have 34 stores. Everyone seems to struggle with this. So let's just take a minute and talk about that. So how much insurance do you need? Well, you need enough insurance to cover whatever that accident could generate, whatever liability that accident could generate. And if you know, in a typical passenger car, 4 people could be injured severely for life, 4 people could be killed. If you look at it kind of even bigger than that, then you know, the worst case scenario that I can come up with is a school bus full of children. What happens if your car or your parts truck hits a school bus? What does that liability look at, and how much insurance do you need? So how much insurance you need is a function of how much your operation is worth. And those numbers can get pretty big, right? Because car dealerships are very valuable assets. And so you have to think to yourself, and we talked yesterday a little bit about the mathematical calculation you go through, but you have to think to yourself, how much insurance would I need to pay the lawyers and pay the families in order that I protect my business? Because, for example, if you have a $20 million liability and you only have $5 million of insurance, then you're self-insuring that $15 million. So what that means is your insurance company would pay out to the $5 million, and then the rest would be on you. And that, to me, that doesn't feel good. That would not feel good. So one of the questions I get asked a lot is, how much is that insurance, and is it expensive? And the answer is typically no, it is not expensive. When you look at it from an overall perspective, liability insurance per million, and I don't sell insurance. People ask me that question too. I don't sell insurance, but I have colleagues who obviously who do, and those limits cost between $1,000 and $2,000 per million. So, for example, $20 million of insurance will cost $20,000 a year, or between $20,000 and $40,000 a year. So, if you're a dealer and you're thinking about your assets, is that 20 to 40,000 worth spending the money? Is it worth you spending those monies to sleep better at night, to make sure that you have the proper amount, that if you have a catastrophic problem, that you're protected? Now, there are dealerships, I know of one, for example, in the top 10 retailer in the country, who doesn't believe in spending all those monies. They would rather litigate, and they have a very low number for an umbrella. So you have to think about what works for you, what feels right to you. If these concerns, if these aren't concerns for you, then you might not need to spend that much money on umbrella insurance. I'll give you kind of a funny example. I have a client who I found out recently, their business is right near a volcano, and the volcano has been inactive for 47 million years, according to the article I read. But I did not know that the dealership was near an inactive volcano, so I wrote to two of the carriers and asked if they had volcanic insurance. If that if that volcano ever became active, would the dealer be covered for their land and building, and would they be covered for the vehicles, which is those are two separate policies. And while this may seem a little silly, and it's kind of a funny thing, because 47 million years, what are the chances the volcano is going to go live after 47 million years? Probably pretty low, but there is a chance, and it only took me 5 minutes to ask the question. So, and this particular insurance company did have volcanic insurance. So you have to think, you have to go through your operation and ask, what if? What if we had an accident? What if the volcano? What if, another example that I like to use, that's really important, that gets missed a lot, on your open lot policy, or your policy for the physical damage for your cars, do you have what's called an aggregate? So an aggregate is where, let's say you have a $2,500 deductible on each car, and let's say a 18-wheeler loses control and plows into your front line and takes out, let's just say for round numbers, 10 cars. So that's $25,000 worth of deductibles that you would have to pay. Now, presumably, the trucking company would be responsible for that $25,000. But let's just assume they don't have insurance, or they're bankrupt, or they are insolvent, or they can't pay the $25,000. So you're going to have to pay the $25,000. So in that case, is there an aggregate, or is there a limit to what happens under one occurrence? So that would be one occurrence. The truck comes and hits your front line. is there an aggregate for that? And an aggregate could be, in this case, like $10,000. So if you have an aggregate on there, then you would only write a check for 10,000, and the insurance company would be responsible for the rest. You wouldn't be responsible for the difference between the 10,000 and the 25,000. Now, the numbers get much bigger if you're vulnerable to tornadoes, if you're vulnerable to hurricanes, or you're vulnerable to large weather events. And don't get a case of the Yets. So as an example, about 2 years ago, there was a dealership up in Northern Virginia that there was a river that swelled, and I believe it was 33 cars literally got washed down the river. You can bet that they found out very quickly if they had an aggregate. Now, in that particular case, that's flood insurance, and some physical damage coverages include flood insurance, some don't. So you would want to, if you have a chance today, consider going to your carrier and find out if you're covered for flood. Flood also, by the way, in case there's not a river right near your dealership, flood insurance is rising water. So if you, one of the things that happens when there's a torrential rain is that the pump stations get backed up and they can't keep track of as much rain. And so if you have storm grates in your lot and they're near inventory, those storm grates can get backed up because the pump stations can't keep up with as much water as is coming from the rain. So that would be a flooding issue. So if you don't have flood coverage, then that's a potential problem. And that flood coverage typically has its own deductibles and its own aggregates. So that's another example of something you might want to look at. But a larger issue is if you have 300 cars on the lot and you have a deductible of $2,000 per car, then what is that? That's $600,000 potentially. If every car on your lot gets damaged from a weather event, that's $600,000 unless you have an aggregate. If you have an aggregate, and an aggregate is, by the way, is something that you can negotiate. That's not the carrier may say we don't offer an aggregate, but that is something you can negotiate. So if you are concerned about damage to all your vehicles, if you're in a weather-prone area, then consider negotiating the aggregate. First, obviously, you have to check. They're not going to give you an aggregate unless you negotiate it. That's for 100% certain. So when you talk, going back to what we started talking about, which was risk, when you are talking about risk, is this something that concerns you? If you're not concerned about writing a check for $600,000 and that doesn't bother you, then this is maybe something that's not interesting to you. But when you consider the number of cars you have overall, and you consider what the risk is for weather in your area, then it's certainly worthy of taking a look and seeing what your aggregates are if you have one. You may not have one. You may have one. But I'd take a look at each of the perils. I'd take a look at flood. I'd take a look at the physical damage. We talked about the 18-wheeler. And the weather aggregate. And there could be a different aggregate for some of these. There's certainly a different aggregate for flood. So continuing on the what if an employee steals something from you? Do you have coverage with that? Some crime policies only cover a certain amount. And so you should look when your agent presents you with a quote for insurance, you should take a look at some of the sublimits. So as one example, if you pull criminal reports on your employees and you discover that they, let's say, and I've seen this 4 or 5 or 6 times now, probably in my years, they stole a beer from 7-Eleven when they were a kid. I don't know what it is and why. I've seen 6 of those. But let's just say one of your employees steals a beer from the 7-Eleven and they get caught with it. Well, that's an economic crime. And your crime policies usually say that if you know that they stole something and you have that knowledge, and they steal something while they're an employee of yours, unless you get an exception for them, then they are excluded from your crime policy. So the insurance companies obviously do that to protect themselves, but um, they will exclude, and they'll say, did you know that he had a criminal report? And if you have a criminal report in your employee file, and you are not disclose, you're not actively trying to get that person exempted from the exclusion, so you can ask the insurance company to make an exception for them and add them back to the crime policy. That's something else you can negotiate. So if you do pull criminal reports, then consider calling your HR manager today, having him or her pull a copy of any criminal report. And that does not include, by the way, let's say they got busted for smoking marijuana. That's not part of what we're talking about. It has to be an economic crime. But take a look at your crime policy and make sure. Um, I think that's probably enough for today. If you have any questions, please feel free to reach out. My cell phone is 757-434-7656. I'll be happy to answer any questions you have, or go to the website Better Vantage Point, go to the website Tuck the Octopus, or email me at tomk@bettervantagepoint.com. I'm Tom Kline, and thanks for seeing things from a better vantage point. Have a great day.